Welcome to Illuminati Silver. We tell the truth about silver. Today is Friday the 3rd of April 2020, and last night we published our daily financial news update, and we place a link to this in the description box below. Now, we won't be publishing one this evening, as we shall be providing a comprehensive weekly update tomorrow, incorporating today's non-farm payrolls and other economic data being published later today. So our update tomorrow is likely to be a little longer than usual. Now today we wish to focus a little on Europe, oil, and particularly gold, and a touch on silver. So focusing a little on Europe, we shall be looking at how the euro area economy is being affected and how some of yesterday's data reflects, and today's almost certainly will highlight what economists are predicting to be a dramatic growth slowdown with even worse to come. Now, according to Bloomberg this morning, quote, IHS Markit said its monthly measure of services and manufacturing points to an annualized economic contraction of about 10%, with new business confidence and employment all down. There is worse inevitably to come in the near future, unquote. The estimate caps a gloomy week for Europe's economy, where figures showed manufacturing in a deep recession, huge jumps or leaps in jobless claims, and thousands of companies in Germany, for example, cutting hours for workers. Now, this morning, Markit's Composite Purchasing Managers Index was published, and it shows a fall to 29.7 in March, even lower than already downgraded estimates, and much lower than the 51.6 reading in February. Now, for information and to put this into perspective, any reading below 50 shows contraction of growth, and this reading was 29.7. And virtually every country that their survey covers has shown a record low reading. The measure for services, which includes hotels and restaurants, was at 26.4, even worse, with Italy dropping to just 17.4. Chris Williamson, chief business economist at IHS Markit, told Bloomberg, quote, no countries are escaping the severe downturn, but the especially steep decline in Italy's service sector's PMI to just 17.4 likely gives a taste of things to come for other countries, unquote. It's also reported that Germany, for example, Europe's biggest economy and the one that has announced the largest fiscal stimulus, is factoring in a minimum of a 5% contraction in growth. The European Commission quotes a 3% cut for every month until this global situation is resolved. Officials in Brussels, Paris and Berlin may be talking about rebuilding the European economy. But a more difficult question altogether will be what they can do about Italy, with estimates that its total debt will eventually exceed 150% of GDP. This will undoubtedly test the EU's ability to provide the necessary resources to save one of its member states, and it appears at least that Britain's withdrawal from the EU will save it from that future expense, especially previously the United Kingdom being a net contributor to EU funds. On a slightly different issue, but nevertheless one affecting most markets, was yesterday's rise in oil prices, sparked by President Trump's tweet that he expected Russia and Saudi Arabia to cut output by around 10 million barrels, or 10% of total global production. The dramatic fall in oil prices have hurt the US shale oil industry, and very few producers can make any money at all at $30 a barrel or less. Whilst Trump's tweets does not reflect an agreement as yet, it has caused those in the OPEC Plus group plus other producers, to call and potentially hold a virtual meeting on Monday. But the White House, it is reported, is also considering tariffs on foreign oil imports to protect US producers. Last night, we reported that Brent crude was up $5.14 at $29.88, and WTI crude was up $4.57 at $24.88, result of Trump's tweet. Now, they closed even higher after our reporting and are also up this morning, with Brent crude now standing at $31.80, so almost $2 more since our last reporting, and WTI crude at $25.87, up $1. Now, if there is an agreement, then we can expect another $5 plus increase, at least on each of these. However, Russia has indicated previously that it was expecting prices to fall to as low as $20 a barrel. But we doubt this will happen because there are too many businesses relying on higher oil prices to permit this route to continue much further. Now, the time of writing this podcast is 10:45 GMT plus 1. And for interest, while US stocks closed yesterday up an average of 2%, European markets are down an average of 1%, following Asia-Pacific markets fall overnight of an average of 0.5%. The dollar index is rising yet again, up another 0.47 today at 100.65. And gold is currently standing at $1,611, down $6 from our last report, and silver stands at $14.46, down just 4 cents compared with our reporting yesterday. Now, later today, we can expect the following economic reports: non-farm payrolls, unemployment rate, average hourly earnings, plus the market services PMI for March, and the ISM non-manufacturing index for March. The latter two we've already referred to in relation to Europe. Now, yesterday we also produced a video entitled, "Is there really a gold shortage and does it matter?" where we highlighted the reasons physical gold was in short supply, with large premiums in the West and United States, and yet premiums in China have actually turned negative. We also covered Russia's decision to purchase no more gold, and yet again we in the West are clamoring after it. Well, to put this even more into perspective and to show it's not just the West clamoring after it, Bloomberg published another article this morning entitled "Gold Squeeze Had Traders Looking for Bars as Far Away as Sydney." And we shall read a little of it here. So all this are excerpts taken from that article. Quote, "The historic squeeze in New York that roiled the gold market last week had investors looking as far as Sydney for supply. Logistical disruptions had led to fears there wouldn't be enough bullion in New York to meet delivery obligations for contracts traded on the COMEX. Investors scoured the globe to track down physical gold, with independent Australian refiner ABC Refinery reporting a surge in demand from North America for deliverable bars last week. We have received increased demand from North America, obviously with the recent COMEX liquidity shortage," said Managing Director Philip Kochinius. Demand also picked up from Europe due to the lack of production from refiners, he said. ABC makes products including 100-ounce, 1 kilogram, and 400-ounce bars, with the latter now deliverable after CME Group rushed the launch of a new futures contract to address supply issues. While the squeeze in futures has eased, there's enough gold in COMEX warehouses to meet delivery obligations. Prices are surging on demand for a haven amid global market turmoil. Investors are pouring into exchange-traded funds. Gold sales at Australia's Perth Mint jumped to the highest since 2013, while the US Mint sold the most bullion coins in 3 years. ABC, which has capacity to refine more than 400 tons of gold and over 750 tons of silver a year, has increased production as it's seeing strong demand in Europe and Asia. in addition to North America. The general demand is for gold in whatever form possible in order to fulfill the huge demand that is running across the marketplace at the moment, said Koshinius. The refinery has focused on making 1 ounce, 100 gram and 1 kilogram cast gold products and 1 kilogram cast silver products. Equities and bonds are out and gold is in, he said. Investors are worried about indebtedness. There's so much corporate leverage in the world. There will be a real deterioration of government finances. Gold will be a natural choice for investors, both large and small. Unquote. End of article. So another perspective of what is happening, we thought it only right that we should share with you. Now finally, a brief announcement which we will repeat on Saturday's video as well, so that most people can hear it. All those silver members eligible for our near-proof 1 ounce silver round, living outside of the United Kingdom, have now been sent their product with an appropriate certificate of authenticity. How quickly it will arrive with you obviously will depend on international couriers and also your own local delivery offices. But we can confirm they've all been sent out. Now, for those living in the United Kingdom, you may have to wait an additional 10 days or so, as we're having your coins delivered to our office, and they are currently en route. The reason for this is that we shall be sending them out from the UK. Otherwise, you will quite likely have been charged either import taxes and VAT on the delivery. And so naturally we did not want that to happen, and we have therefore made the charge payment ourselves by having the delivery routed to us. So we hope that us attempting to save you a few pounds, and probably annoyance to be frank, is worth the slightly longer wait. We also wish to point out that those who remain with us as silver members for a second year will receive another coin of a slightly different design, which we will deem highly collectible. And actually we may even put in even better packaging. We had to keep the packaging as slight as possible on this occasion, if only to ensure delivery. And in addition, we shall shortly be making arrangements with you for a one-to-one conference with myself and controversially Greg for up to an hour's duration to discuss any topic you wish regarding our sphere of experience. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of videos as and when they are published. Also, hopefully not forgetting that we update our Richard and Greg channel every other day, and in fact we did upload a video last night. And so if you haven't already done so, please subscribe to that one too. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.